Where should you invest your emergency funds? All finance gurus tell you to have a 3 or 6 or 9 month emergency fund. But keeping all of it in cash or your savings account isn't smart. A great framework is the 2-bucket rule. So a small bucket of your funds stays in cash at home. That is for absolute and immediate emergencies. While the remaining amount can go into safe investment options which are not too volatile and offer easy and immediate exits. But how do you find such an investment? A great investment instrument to park your emergency funds with low risk are corporate bonds, which can offer safer returns of up to 12% per annum. While corporate bonds sounds like a complicated term, it is actually quite easy to understand what it is. Here is how they really work. When you invest money by buying a corporate bond, you are essentially pooling your money with other investors and lending it to a company. In return for borrowing your money, the company makes you two promises. First is that it will pay you interest on a regular basis, usually every 6 months. And second is that it will pay you back the full original amount on a set date in the future. This original amount is called the principal, while the date on which the company will return your money is the maturity date. So think of it like this. Your friend owns a business and wants to borrow 1000 rupees from you. He says, I'll pay you 50 rupees every year and I'll give your 1000 rupee back exactly 5 years from now. That's basically how corporate bonds work. And it's a win-win situation. The company can use the money to grow their business without selling shares, while you get a steady income and your money back on time. Now here is the question that most new investors have about corporate bonds. How do you invest in them? The answer lies in 3 easy steps, and the third one is the most important of all. The first step is to open an account with a platform that helps to buy corporate bonds like Wint Wealth. And the process is extremely easy. All you need to do is download their app from the App Store or Play Store. Then you need to enter your mobile number linked to your Aadhaar card. The app will ask for a few basic details like your name and email address, after which you'll have to go through a quick KYC process. This will also open your Demat account with Wint Wealth. Finally, you will be able to browse a number of bonds and invest in seconds. But before you do that, you need to learn what are the different types of bonds. See, bonds can be of two types: secured bonds and unsecured bonds. When the borrower does not back their borrowing with any guarantee or collateral, it is called an unsecured bond. On the other hand, if the borrower pledges some sort of collateral as a guarantee, like real estate, loans or assets, then it is called a secured bond. In case the borrower defaults on the payment, this collateral can be liquidated to pay back the lender. There is another subtype of secured bonds which is called senior secured bonds. The term senior indicates that in case of a default, these bondholders enjoy a higher priority in getting repaid than other types of investors. Here is a simple example to understand this. Remember that friend who wanted to borrow 1000 rupees from you for his business? If he does not give any guarantee and just says, trust me, I'll pay you back, that is an unsecured bond. But if he says that you can keep his cycle if he can't pay you back, that is a secure bond. Now let's suppose that he raised money from several other people in the neighborhood. If he goes bankrupt tomorrow and can't pay everyone back, the people with a senior secured bond will be the first in line to get paid. Naturally, senior secured bonds are low risk. On Wint Wealth, all bonds are senior secured bonds, so the security is the highest you can get. But that's not the only benefit of choosing Wint Wealth. There are two more. Firstly, the corporate bond options available to choose from are handpicked by Wint Wealth. So the options have already been scrutinized for security and reliability before being offered to customers like you. Secondly, the terms of the bonds are much more favorable. The minimum investment required is as low as 1000 rupees. The bonds are short term, so your money is not locked in for a very long time. And the curated collection offers the highest returns at the lowest risk possible. So a lot of study and scrutiny which you cannot do as a retail investor is done for you by Wint Wealth. Now that you know this, we come to the final and most important step, which is selecting and buying the right bond. Once you've created an account on Wint Wealth, you will be able to browse the bond section of the website. Here, you will need to weigh in a few factors to find the best option for you. The two most important factors are the YTM and bond rating. YTM, or yield to maturity, is the annual rate of return you earn from a bond. It is also known as XIRR. To understand this in a simpler manner, you can also just look at the pre-tax returns against your investment. So in the case of Navi May 25, if you invest 9,995 rupees for 3 months, you'll get 10,219 as your final returns after 3 months. Remember that this is only an example, not a recommendation. The second factor is rating. In India, multiple agencies assign credit ratings to bonds like CARE and CRISIL. The higher the rating, the safer the bond is. AAA is the safest, while anything below BBB is a junk bond below investment grade. Now the YTM and bond rating are dependent on each other. Bonds with high ratings often offer low returns, while high risk bonds usually offer higher returns. The best thing about Wint Wealth is that none of the bonds are below a BBB rating. Next, you have to select the tenure of the bond. For the Navi May May 25, you can choose anywhere between 3 to 23 months. If you have a lower risk appetite, you can choose a lower term and keep reinvesting the money that you receive at the end of each term. Other than these factors, you can also check a lot of other information about the bond, like the security cover, which is basically the collateral that the borrower is going to pledge. It's 1.1x in the case of Navi May 25. So for every 1000 rupees it borrows, it will pledge 1100 rupees as collateral. If you want to dive deeper, you can check more info about the bond. You can see the comforts or what Wint likes about this bond, as well as the potential risks involved, all with transparency. You can also find out how the bond returns will be taxed and other details about the bond. To compare multiple bonds, all you need to do is go to the bonds page and browse the options. You can even sort by ratings, tenure, returns, and investment needed. If you have a higher risk appetite, you can go with bonds with a high yield percentage. However, if you feel that you need to be more conservative and secure, you can buy bonds with a higher rating but lower YTM, like Piramal June 25, which has a AA rating with a YTM of 10.25%, slightly lower than what we saw with Navi. Again, this is only an example, not a recommendation. And that's how in 3 easy steps you can start investing in bonds. But before you start investing, make sure that you have these 2 things in mind. Number 1 is that bonds are a lot less volatile, but they are not risk-free. If the company gets into trouble, it might be unable to pay you back. So investing in bonds with good safety ratings and choosing a good investment partner like Wint Wealth is very important. There's a reason why it is backed by the top founders and fintech pioneers of India. Number 2 is that you can sell bonds before the maturity period as well, but the price that you will get will vary according to the market. If the bank interest rates are higher than what they were when you bought the bonds, your bonds value might fall. Similarly, if the interest rates are lower, then your bonds value might rise. While the fluctuation is not very high, it does exist. So if you might need that money urgently, it's best to invest in bonds with a shorter maturity period. If and when you decide to sell your bond, you can do it easily from your account in just a few clicks. So now you can confidently invest in corporate bonds, whether it is for balancing your investment portfolio or parking your emergency fund. You can check out more details in the FAQ section of Wint Wealth. I'll leave the link in the description below. Until I see you in the next video, goodbye.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.